Welcome traders to this new market review of week 5 for Nasdaq futures. So we are currently looking into the weekly chart for Nasdaq. And as you can see, we did have a down close week. So the opening price was 21,771. Usually when we have down close candles, we have the open, high, low and the close. But this week was a little bit different due to the deep seek news of last Monday, where we had a huge drop. I'm gonna look into it in a few moments. So we opened up, we created the low, created the high on Friday, and we closed at 21,571. So looking into the daily chart, this was Monday's price action. It was actually Sunday's price action and London's price action, which created this range over here. From open to low, more than 1,000 handles. And then in the New York session, we had buy side delivery from this low towards this close during the AM session and the PM session. On Tuesday, we had an up close as well. On Wednesday, we had a relatively small range. On Thursday, we had an up close. And on Friday, we had a beautiful buy side delivery with a TGIF which unfolded. So, if you've seen my game plan for last weekend, for last week's trading, I was expecting price to trade into these relative equal highs over here, with the main draw on liquidity at 22,111.25, which was this candle's high of Thursday, December 26, 2024. So for last week, we were looking into this economic calendar for the week. On Monday, we had 10 a.m. news driver, medium impact. On Tuesday, we had 8:30 a.m., 9 a.m., 1 minute before 10 a.m. and 10 a.m. high impact news driver. On Wednesday, we had the main headliner for this week, which was the federal funds rate release at 2 p.m. and the corresponding FOMC press conference at 2:30 p.m. And in the AM session, we had a crude oil inventories release, but that report doesn't have a big influence on indices. So on Thursday, we had another high impact news driver as well, which was the advanced GDP quarter on quarter, unemployment claims, and medium impact news driver at 8:30 a.m. At 10 a.m. we had pending home sales month on month. And on Friday we had an 8:30 a.m. news driver, which was the core PCE price index and the employment cost index. And at 9:45 a.m. we had the Chicago PMI news release. So on Monday we had a 10 a.m. new home sales release report, medium impact news driver. So at Sunday we opened with a plus 100 handle new week opening gap, and we traded all the way down during the Asia delivery at Sunday, using the new week opening gaps and new day opening gaps. During London, we created the midnight opening range inside new week opening gap, the first one of January. traded around the midnight opening range, traded to the downside, note the 2 a.m. Macro delivery. So it took buy side liquidity above this short-term high into this SIBI over here, and we traded to the downside, and we had from the Sunday open up until the 6 a.m. macro, we had a plus 1000 handle delivery to the downside, which was just used as a smoke screen if you ask me. So during the AM session, we prior to the new AM session, we were in a deep discount, and we used the AM session to trade towards a premium. So note the delivery around the new week opening gap over here. 9:30, market opened, created the first presentation over here, traded back into it, and had some buy side delivery. Yeah, to be honest, I didn't really trade it, this one. Why didn't I trade this one? Because my entry would be the high of the busy, which was the first presentation. Yeah, and where do you want to place your stop loss? Below this low doesn't make any sense, because here is another busy as well. So you need to use this low, and you already have 131 handles, which is totally inappropriate for placing a stop loss. So after 10 a.m. we traded into the first presentation. So here was 10 a.m. Judas swing, beautiful run over here. The 15 seconds you could have captured it over here, but to be honest to you, on Monday I didn't take any trades. So yeah, that's it. During the PM session, nothing really excited took place over here. Just some back and forth price action inside the first presentation. So that's it for Monday's price delivery. So for Tuesday, the Asia session was consolidating. Note how the macro still delivering. What else do you expect? Okay, so after midnight, we created the midnight opening range for the day. We manipulated to the downside into -1 standard deviation measured from the midnight opening range. We displaced above it, above the new day opening gap over here. We traced into the midpoint of the midnight opening range, and we displaced to the buy side. Over here we can see that this was just manipulation, and over here we reversed to the sell side again. Note how we used the new day opening gap and the midnight opening range. We at 8:30 a.m. we had a news driver, and what do we know if we have 8:30 news? That 8:30 generally gives a Judas swing, which happened over here. Note how we took these relative equal lows, printed between 7 a.m. and 9:30 a.m. At 9:30 a.m. we manipulated once more to the downside into the first presentation of Monday. And as you can see, Monday's price delivery was, especially the PM session, we traded a lot of times back and forth inside this fair value gap. So you know that during the AM session the very next day, that price may use this first presentation rather than Tuesday's first presentation. So let's look into the AM session. So over here we manipulated to the downside. Over here, small shorting opportunity, could have captured it. I was watching this and I was actually anticipating a buy side delivery. So I was waiting over here. The premium array, which was a SIBI, got respected, created a new SIBI, respected over here, created a new one, traded into it. S&T was occurring at the lows. If I'm not mistaken, I'm actually mistaken. There was no S&T over here. But over here we had a beautiful up close candle creating a busy. Note how IOFET took place over here and buy side delivery was next. And I actually took this trade. So let me see. It was actually this trade. It was my phase 2 of FTMO 50k challenge. So I was waiting for the right conditions to position myself. And let me see. Over here inside the busy where IOFET took place, I entered long, took something off inside the first presentation over here, took something off above this high over here. I saw this busy got respected, traded up, and yeah, I was just taking partials on the way up. I just fell short of getting a 5-hour trade, and I wanted to finish my phase 2 in just one trading session, so I entered long here. Over here I wanted to take partial, but instead I made a small mistake by adding to my position. Let me see. Over here, small add-on. Yeah, and I closed it on the way up. Yeah, over here you can see the trade I took was actually targeting the new week opening gap, and yeah, there was just some beautiful delivery for that day. So looking into TradingView, entered long here, that was my main position. Traded up into the midnight opening range of Monday. Note how it still respected the very next day. Over here we created a short-term low after 11 a.m. Preferably after 11:30 a.m. We expect the market to do some sort of retracement into the nearest sell-side liquidity pool, which were these relative equal lows over here. If you go to the 30-minute chart, which I'm not gonna do for now, but you can investigate it yourself, you can see that this very low over here is the high of a 30-minute busy. I think it's from this candle's low to one of these candles highs, traded into the 30-minute busy, and continuation was next. Over here I saw that consequent encroachment was reached of the new week opening gap, traded above it. Yeah, when I saw these candles printed over here, I was pretty sure that price would continue towards this new week opening gap. Yeah, just beautiful. And eventually I think I collapsed my position over here. I didn't manage to capture this yeah, small run over here, but I was pretty content because already booked like a +5R for the day and I finished my phase 2, so that's yeah, that was a good thing. At the 15 p.m. macro we reversed 15:30 p.m. macro, so from 15:15 p.m. till 15:45 p.m., which is the second macro inside the last hour of trading. We fell short of taking these highs over here, and we traded all the way back down into the new week opening gap high over here. On Wednesday, we had this tiny new day opening gap over here. We consolidated during the Asia session. After the midnight opening range was formed, manipulated to the downside at 1 a.m. exactly, we had this huge up close candle. Very next candle, we just fell short of trading into the new day opening gap. It traced into this busy over here, and there we had the new day opening gap reached, trading above these relative equal highs over here, taking buy side. So during the 3:30 a.m. macro, which is the heart of the London kill zone, took this buy side liquidity pool, displaced to the downside below this intermediate term low, and this intermediate term low because these were both trading inside this busy over here. So we had displacement over here, beautiful shorting opportunity, let's say 50 handles, I think. You might have taken something off below this low over here, so let's say 40 to 50 handles, which is beautiful if you ask me. So remember, Wednesday was the FOMC federal funds rates release, so we expect the AM session to be low probability and a high resistance liquidity run. So I wasn't taking any trades during the AM session, but I was obviously tape reading it. So at 7 a.m. took all these relative equal highs over here, which were printed, let's say between 5 a.m. and 7 a.m. Between 5 a.m. and 7 a.m. The market generally goes into consolidation, which you saw over here. After 7 a.m. we had some sell side delivery taking place. And the market opened up at this candle over here. We had a very, very small opening range gap. So let me see. It was somewhere around here, which is 15's closing price the last trading day. Till here, yeah, it was, I think it was somewhere below the 40 handles. So yeah, that was an indication for me that I thought, okay, the AM session is yeah, it's confirming that the AM session will deliver a high resistance liquidity run. On top of that, when you were comparing the indices, you saw that they were decoupled at market opening, which was low probability as well. So after 9:30 a.m., this was the 9:31 a.m. candle, where we created this small tiny SIBI with volume imbalance on top and on the bottom of it. So merging those together, forming the first presentation. traded down, retraced up, but fell short of trading into the first presentation. And note how choppy price was delivering. So if we, let me see, if we take this fair value gap, for example, which is a SIBI extended to the right, look what's occurring over here. I'm not gonna count the candles, but yeah, it's a dozen of candles trading into the SIBI, pointing to you that we are in high resistance liquidity run conditions, and that trading may not be favorable for the AM session. So going into 12 o'clock, yeah, look what a mess it was. But it could be anticipated because we had a huge news driver in the afternoon at 14 p.m. We had a small opening range gap, and we had the coupled markets. So yeah, I don't know why you want to trade the AM session prior to the Fed fund rate release, but that's up to you. So 1 AM macro, creating this beautiful low, taking all the AM sell side liquidity below these relative equal lows. The purple shaded area over here is the midnight opening range of Monday. Note how it's still used throughout the week, so you might you may want to use it as well in your analysis. So at 14 p.m. we had the interest rate release, and at 14:30 p.m. we had the FOMC press conference, which always happens together. It is a two-stage delivery. Between 14 p.m. and 14:30 p.m. we generally have a Judas swing. Price was rather consolidating, but was slightly trading towards the sell side. And after 14:30 p.m., note what happened. Buy side delivery, creating a beautiful fair value gap. So what is everybody doing over here? Taking their long positions. Well, maybe put their stop loss below this short-term low. So these three upwards up close candles over here had one function, and it was to engineer even more sell side liquidity. The low was taken, and we had a beautiful run into buy side. Note the new week opening gap, new day opening gap, and the first presentation over here. So the AM session engineered this, and this, a quadruple equal high, but fell short of trading into the first presentation. And note how the PM session uses the first presentation. Do you think that's just a coincidence? Well, backtest it for yourself and you find out that it's not a coincidence, because this happens quite a lot. So most of the cases the first presentation is used inside the AM session. If it's not used inside the AM session, anticipate the PM session to trade back into the first presentation or the very next day. If price doesn't trade into it the whole day, then I expect the most obvious runs unfold themselves the very next day. So let me see what happened over here. Trading into first presentation, retracement into midnight opening range, into the midpoint. We had one buy side delivery, one minor rally as well, taking these relative equal highs. Look at the time, 15:15 p.m. till 15:45 p.m. is the second macro of the final hour of trading. Note the delivery, trading into the buy side liquidity pool, trading all the way down. Note the delivery of the third macro of the final hour of trading, which is 15:45 p.m. until 16 p.m. Okay. Interesting high over here. So we had this high over here, just fell short of trading into new day opening gap, and this beautiful SIBI over here. At 4 p.m. we opened here, creating the high inside the SIBI over here. Beautiful sell side delivery. Don't be mistaken, measured from this high down to this low, 179 handles in just 5 minutes. But just be real. Let's measure from this SIBI low towards these relative equal lows over here. It's still 169 handles, which is absolutely beautiful if you ask me. So final macro in the final hour of trading is from 15:50 p.m. till 16:10 p.m. because every whole hour is a macro. So we took sell side over here and this placed all the way up. Where did price stop? Above these relative equal heights over here. Note the bodies closing inside the midnight opening range of Wednesday, created over here. Yeah, just some beautiful runs this day. Absolutely amazing if you ask me. Something I need to backtest for myself is that ICT taught us that if you have a FOMC press conference or something like that, or FOMC meeting minutes, or yeah, some PM session delivery, you can try to trade the pre-market session prior to 9 a.m. or 9:30 a.m. and that unfolded right here. So this is actually the setups I'm looking for: relative equal highs taken, purge and revert. But yeah, I have to be honest, I didn't take that trade, so yeah. So on Thursday we had two medium and high impact news drivers. We had one at 8:30 a.m. and one at 10 a.m., which I absolutely love, because if you have those two news reports coming out, one at 8:30 a.m. and one at 10 a.m., most of the times you see 8:30 a.m. Create a small minor run, and the 10 a.m. news driver will create the main run. So we're gonna look into Thursday's price action and see if we can see that translated to the charts as well. So midnight we opened up at 21,660. Had some consolidation going into the 1 a.m. macro, which unfolded over here. So 1 a.m. we opened over here, immediately trading to the buy side, taking these relative equal highs over here, trading to the downside during the 2 a.m. macro. See what happened over here. Displacement, volume imbalance. Volume imbalance immediately rebalanced. In the same candle the volume imbalance was formed. You see that quite a lot, which is a bullish algorithmic signature to you that price is telling, okay, we're not going down anymore, look up, look to the buy side, and note what happened next. Yeah, so upwards delivery into the midnight opening range low. Note I annotated the first displacement, the first presentation inside the midnight opening range as well. So traded into it, trading into first presentation, midnight opening range high, creating relative equal lows over here, waiting for the right time, which is the 2:50 a.m. till 3:10 a.m. So the 3 a.m. macro. Note what the 3 a.m. candle was doing, trading all the way back into the midpoint of the midnight opening range inside the first presentation for the day, below these relative equal lows, trading up into new day opening gap, closed above the new day opening gap, repriced into the new day opening gap high, buy side delivery was next. Okay. Note where the highest formed, 21,715.5, which is just one tick above the consequent encroachment of the new week opening gap. So that's, yeah, beautifully delivered if you ask me. So into 3:30 a.m. traded back into this bullish order block premium wick over here, into this buy side imbalance, sell side inefficiency plus a volume imbalance. Traded up. We already did use this new week opening gap as a premium array, and the bodies are not closing above it, so we fell short of trading above this high over here, and 4 a.m. macro reversed, taking the 2 a.m. macro low. Inside the latter part of the London session, so between 5 a.m. and 7 a.m. we had consolidation, engineering liquidity over here. Note the 6 a.m. macro delivery. Boom. Must be random. Okay, this was the 7 a.m. Candle, trading into midpoint of midnight opening range and the first fair value gap for the day. Displays below these relative equal lows into the first presentation of Wednesday. On Thursday. So if you look at this, it's just, yeah, beautiful if you ask me. Note the delivery over here. So 8:30 came along, which was this beautiful up close candle over here. So at if we have 8:30 a.m. news driver, we expect a small move after 8:30 a.m. And when you have 10 a.m. news as well, then you expect the real run to occur after the opening bell. So what happened over here? We had a up close buy side delivery over here. So buy side liquidity above these relative equal highs into the SIBI over here, just above midnight opening range. Engineering liquidity below this low, which was sell side liquidity. So yeah, actually low people who are involuntarily wanting to to sell for low prices. Just keep it simple for now. So we created relative equal lows over here, manipulated below them, pairing these sell orders with smart money buy orders. Beautiful buy side delivery into these and these relative equal highs. Don't be mistaken, this run over here, not measured from this wick over here, but measured from this wick 69 handles. I think it's yeah, pretty decent run. And if I'm not mistaken, I actually tape read that trade. No, it was not. It was actually this long, but we go into it in a few minutes. So what happens prior to the 9:30 a.m. opening bell, which was this black candle over here, down close candle over here. So we created another relative equal lows over here. 9:30 came along. We opened trading. So maybe I need to look at it like this. It's even better. So 9:30 came along, open, high into first fair value gap, low close. We had these relative, this one and this one, these relative equal lows intact. We took them. I was monitoring this candle's opening price because that for me is a change in the state of delivery. I'm aware that ICT calls these 4 consecutive down close candles as the full bullish order block, so we need to look at this opening price. But yeah, for me personally, I'm looking at this one because this is just too high. So looking into this opening price, we had this up close candle trading away from new week opening gap, which was in confluence with midnight opening range. Traded one tick above it, change in the state of delivery occurs, so we go from a sell program to a buy program. First presentation was created over here, so we trade above it. If you wanted to enter here at the first presentation, yeah, you were not happy, keep it that way. So trading back into first presentation, but trading all the way down. Why would we do that? Because we had this and this buy side busy 1, busy 2. So note we're repricing into both the busies, trading into optimal trade entry from here in a relative discount measured from this low to this high over here. Boom. Note the reaction from the first presentation, reaction from the first presentation inside the midnight opening range. Yeah, just beautiful if you ask me. So 10 a.m. came along. 9:30 till 10 a.m. the opening range was established, measured from this high to this low, from this candle towards this down close candle over here, opening range. Yeah, and there you can make your measurements. So if we are doing that for now, from high to low, okay, give me a second, guys. Negative 0.5 and negative 1 annotated. And now we're gonna add all the old first presentations of the last 2 weeks of trading. Yeah, I know it's a mess right now, but I'm gonna clear it up in a moment. So measured from this high to this low, negative 0.5 standard deviation. Note the confluence with an old first presentation, which was the first presentation of Friday, January 17th. Negative 1 standard deviation inside the first presentation of the first day, January the 16th. Do you think this is just a coincidence? Okay. Yeah, I leave that up to you. Let's clean up the midnight opening ranges as well for now, because otherwise it's getting pretty ugly over here. So, comparing with ES and Dow Jones, this high over here and this high over here. As you can see, lower high in NQ, which is the left chart, tiny lower high in ES, but a higher high in YM. So that's S&T, if I'm not mistaken. Okay, trading back into new day opening gap, retracing into SIBI over here, rejected it, confirmation that we're going from buy side delivery into sell side delivery. So after 9:30 a.m., sell side was taken first, buy side was taken next. Beautiful sign that price is going down, and note what happened. And note how price is using all the old new week opening gaps and new day opening gaps. That's why I have all these lines annotated on my chart, because I not want to miss these levels for high class precision, if you ask me. So this was the major run, which could be anticipated because 8:30 a.m. news release, minor run, 10 a.m. news release over here, major run. Note how it was unfolded. So during the PM session, we had beautiful buy side delivery as well. Note the 15:30 PM macro delivery and the 15:45 till 16 PM macro delivery, which was this low and this buy side delivery over here. Let me see, what did I want to discuss even more? Yeah, I think it was it for now. Maybe yes, that was what I wanted to annotate. Okay, excuse me for the many lines you can see in the chart right now, but I always have these in maps in TradingView because I want to know where my new day opening gaps are, where my new week opening gaps are. Note this high over here inside the new day opening gap formed more than a month ago. Christmas Eve, the Tuesday, new day opening gap was formed. High, low, high inside new day opening gap of last week's Wednesday. So that's why I highly advise to use these reference points as well. But for now, just focus on the last 5 NWOCs and last 5 NDOCs. Okay, that's it for first day's price action. So for first day, the AM session, I wanted to show this as well. Picks or it didn't happen, right? So 9:30 a.m. news release was here. We're looking at the 15-second chart for Nasdaq. We had these relative equal lows over here. So manipulation to the downside. Change in the state of delivery. On the 15-second chart, volume imbalance. I entered long here. I just tape readed this because paper trading on TradingView was under maintenance, I think, so I couldn't open my paper trade account. And I was just not trading on my live account for that day. So over here we already booked like 4 to 5R, something like that. With a very deep retracement inside the 1 minute busy, which we were looking into a few minutes ago. Note the reaction from this busy into the new week opening gap. And as you remember, that run which I outlined to you is just this run over here. Not looking into this high because I wasn't expecting this. I was just looking for this. So this buy side delivery over here, looking into the 15-second chart, that is how you can frame a 10-hour trading setup. And this is just not a coincidence that it happened, because these setups form many times throughout the day when you can refine and define your stop loss accordingly. So using a very tight but intelligently placed stop loss can help you guide to find these setups. And note that this buy side delivery wasn't even the real deal for the day, because the real deal was this sell side delivery. Yeah, study this for yourself, and I hope you can find the value in it. On Friday, last day for the week, creating midnight opening range from this candle's low to this candle's high at 0:23 a.m. Displaced above it, trading into the upper quadrant. Note a reaction from here. 2 a.m. macro, taking relative equal lows to the buy side. 3:30 a.m. delivery. Boom. Back into the midnight opening range. Forgot to mention we are trading currently inside the into the lower quadrant of this new week opening gap. So note the delivery from 4 a.m. macro. If you define this at the 15-second chart, you can capture beautiful runs. What is this? I don't know. So taking this short-term low over here, trading above first change in the state of delivery, trading above second change in the state of delivery. So going from sell program to buy program. Note how this busy is used and this busy is used, trading into all these relative equal highs over here. So that that's just beautiful algorithmic delivery, if you ask me. So what happens next? Need to look into the news economic calendar, forgive me. 8:30 a.m. we had high impact news, and 9:45 we had medium impact news. So 8:30 a.m. this was the Judas swing when it comes to the 8:30 a.m. news delivery. Tiny little shorting opportunity over here, taking relative equal lows. Boom, buy side delivery. 9:30 a.m. market opens with a huge, more than 120 handles premium opening range gap, which means that normally in 70% of the cases the opening range gap consequent encroachment is trading to inside the opening range, so inside the first 30 minutes of trading between 9:30 a.m. and 10 a.m. But when you have a very large opening range gap, continuation is more likely to occur than repricing into the consequent encroachment of the opening range gap. So buy side delivery was on the horizon. Note what happened over here. So creating first presentation over here, trading into it, but trading into the new week opening gap low, trade above it, treating this busy as a reclaimed busy, trading up into new week opening gap high, and at 11 a.m. macro we created this session high between this new day opening gap, this new week opening gap. So this is event horizon, which I'm not gonna annotate for now. And note what happened next. So due to the large premium opening range gap, continuation up during the opening range was likely to unfold. Note what happened. Into the first hour of trading, into the 11 a.m. macro, their price started to reverse. And note the beautiful sell side delivery which took place. See, yes, so when you have all these old first presentations of every day's AM sessions, yeah, you can see that these fair value gaps are used in the future. And yeah, I'm very grateful that I can add these things to my chart, because they give a beautiful insight in where the market is going, where the market is likely to reverse. So yeah, that being said, no TPM delivery, beautiful sell side delivery, consequent encroachment, lower quadrant somewhere over here, trade back into it, new week opening gap low, to new day opening gap, falling short of trading into new week opening gap low, trading into this inversion fair value gap. Note where the move started, NDOC high, MWOC, NDOC high, and after 16 p.m. most of the move was established. So I have many screenshots of this price action. So I actually was anticipating sell side delivery because there was a huge premium built in markets. So I was trying to capture this short over here, because we had short-term high over here, short-term low, taking the short-term high, creating SMT at the highest, trading into the new week opening gap high. I was looking at the bodies, and the bodies stayed inside the new week opening gap. So I was actually aiming for a busy, which you can't, which isn't being seen on the chart right now. But if price just traded into new week opening gap consequent encroachment, I would already have like a 5 to 6 hour or something like that. And unfortunately, this is where my stop loss got hit, but managed to capture a 3R, which is pretty nice if you ask me. Then price just retraced into a discount array and creating a new high over here. So over here I saw that 11 a.m. macro created this high with SMT at the highs between ES and Nasdaq. So I entered short here, placing my stop loss above here, and note how price was delivered from there. Already 2R in the pockets, so that was very nice. Pretty deep retracement over here. Sell side delivery was next. I measured this candle's low's wick, and as you can see, I can't zoom in for now. But as you can see, PWCE, which is premium wick consequent encroachment. And why did I call it a premium wick? Because I annotated it when price was just here. At this point in time, it was a discount wick consequent encroachment, so a discount array. But I was already anticipating price going to the downside and treating this as a premium array. Okay. Again, premium wick consequent encroachment. If you measure this wick and this wick, you have two premium wick consequent encroachments creating gray pool, annotated over here. I was actually targeting this discount busy over here. So price traded below the gray pool into the gray pool consequent encroachment over here. We had another gray pool over here. I was just doing an exercise for myself because I'm not using these gray pools too much, but I want to get used to it, so that's why I annotated them. Beautifully used as support. Note how we traded into the busy, trading a +5R trade again. Okay. Deep retracement to the upside. And note what happened next. Consolidated above the gray pool over here. Note where the move started. Gray pool and walk high. Trading back into this premium wick consequent encroachment. Boom. Into new week opening gap consequent encroachment. Yeah, and the rest is actually history. So note how this gray pool was used and this gray pool over here used as a premium array. And note, yeah, I think measuring all this sell side delivery is not really fair to do, but you can see how easy it is to capture a +5 or +10R trade using the 15-second and 1 minute time frame. Note our first presentation on Friday was used as premium array as well to send price deep towards the sell side. Okay, last thing I forgot to mention actually, why I was expecting some sell side delivery, because Monday we had this huge drop towards discount, upwards price action over here. Tuesday, long opportunity. Wednesday, upwards price action. Thursday, upwards price action. Friday, creating the high of the week, just above the new week opening gap for this week. So, if you have such a large expansion, then I expect the following to unfold, which is number 12, TGIF. So, measured from this high to Monday's low, this orange level over here is the 0.2 TGIF level, and over here the orange level is 0.3 standard deviation level, measured from the weekly candle. So that is why I expected some downwards momentum. And if price wouldn't have delivered that and went up even more, then yeah, I was content with that, and I was expecting next Monday to deliver the TGIF, so some sort of retracement. So, as mentioned during the market game plan for last week, I was looking for these relative equal highs. Price didn't trade into it yet, so yeah, for me it's pretty it's still the drawn liquidity, so longs are favorable, but shorts can be traded as well at the right time. Okay, traders, hope you learned something from this market review of week 5. Tomorrow I will be back with a market game plan for week 6. And I want to wish you a very nice weekend and an even better trading week ahead. See ya.